Good evening, members. Myself, C. Raj Chawla, welcome you all in this today webinar on expenditure related to exempt income. Means thereby we will cover section 14 and 14A, and we are very honored to have today with us as a speaker, Advocate IP Bansal ji. Advocate IP Bansal ji is practicing as a lawyer since 1976. He has served ITAT for 16 years and he retired from ITAT in the year 2015. And after that, he is again serving as a law profession in income tax in Delhi High Court and Supreme Court of India. And also, I welcome CA Sunil Talati ji, our past president of ICI. He was president in the year 2007-8, and he is MCOM, LLB, FCA, and he is having his office in Ahmedabad and various other places. So I welcome you, Talati sir. Also, I welcome CA Sunil Garji, my partner and moderator of this webinar. So friends, now I request CA Sunil Garji to please start this webinar.
Good evening, friends, and a very warm welcome to ex-president of the Institute of Chartered Accountants of India, Shri Sunil Talati ji, who is the session chairman today. And I also welcome Shri IP Bansal ji, a luminary in the direct tax matters. He served as a ITAT member, and I have the blessings of Shri IP Bansal ji to be associated with him as a partner. So friends, we started this journey on 16th June and we have covered 3 chapters. In the last 2 webinars, we have covered chapter 3, that is income that do not form the part of the total income. But from today onward, the real journey, the real battle of taxing the income starts. Now it's time to chapter 4, and this chapter 4, we are decoding today section 14 and section 14A. And what is the relevance of these 2 sections? This section 14 defines the head of income. Friends, as I always say or suggest that we should not forget the definition of total income, because it is the tax on total income. Tax is always calculated on the total income. Tax is never calculated on the income. And what is total income? 2 clause 45 says total income is the amount of income referred to in section 5 computed in the manner prescribed. Meaning that to come under the purview of the tax, first there has to be an income which is referred in section 5, scope of total income, and then the computation mechanism, it should also not fail the computation mechanism. If the computation mechanism fails, even then the income cannot be taxed. You might be remembering a famous case of Supreme Court of India in case of BC Srinivas Sethi. What the court has said? Because the computation mechanism fails, so goodwill cannot be taxed, though it is a taxable income. It comes under purview of the tax. Now, this is the relevance of this head of income. And friends, as I said, as I always say, we have 5 head of income. Then what is the relevance of that 5 heads? First, the test is it should be an income, should come under the total income, and then it should come into a particular head of income also. And to come in that particular head of income, it has to pass the chargeability test of that particular head also. As you know, section 15 is the charging section of salary. Section 22 is the charging section for house property. Section 28 is for the business income. 45 is for the capital gain. 56 for the income from other sources. If the test also fails, 45, 56, 28, 22 test fails, even then the income cannot be taxed. And again, if you are going to be taxed with a particular head of income, it is also very much relevant, sir. Bansal sir will explain. Take an example, take a case. I take 2-3 minutes more to set the tone of this webinar. मान लीजिए आपके पास में इनकम है और वो इनकम आपकी इनकम फ्रॉम हाउस प्रॉपर्टी में टैक्स हुई. मान लीजिए आपने कोई इनकम, एंड यू माइट बी रिमेंबरिंग द फेमस केस ऑफ चेन्नई प्रॉपर्टीज इन सुप्रीम कोर्ट ऑफ इंडिया हेल्ड कि आप अगर इनकम को इनकम फ्रॉम हाउस प्रॉपर्टी में टैक्स होगी तो आपको क्या मिलेगा? आपको डिडक्शंस मिलेंगी हाउस टैक्स की 30% and interest on borrowed capital, no depreciation, no other expenditure. But if the same income is being taxed in the business head, then you will get all the deductions. Now, how to check which head is suitable for this income? This we are going to decode today. And what is the relevance of the head of income? अगर आप पर्टिकुलर हेड ऑफ इनकम में नहीं जाते हैं, देखिए 45 की क्या कंडीशन है? There has to be a capital asset. There, it should come into the purview of the capital asset. It should come into the purview of transfer. कैपिटल असेट होनी चाहिए, ट्रांसफर होना चाहिए, प्रीवियस ईयर में ट्रांसफर होना चाहिए और कंसीडरेशन होना चाहिए. तो सेक्शन 14 की अपनी एक रेलिवेंस है. अगर हम सेक्शन 14 को नहीं पढ़ेंगे, नहीं समझेंगे, तो आगे की जर्नी बहुत मुश्किल हो जाएगी. और सेकंड जो सेक्शन आज है बड़ा इंपॉर्टेंट, दैट इज 14A. बहुत डिबेट होती है इस पे, हमेशा से ही डिबेट रहती है. नो एक्सपेंडिचर शुड बी अलाउड अगेंस्ट द एग्जेम्प्ट इनकम. इसमें बहुत सारे सवाल, कुछ सवाल जो मेरे सामने मेरे ऑडियंस ने भेजे हैं, मैं बंसल साहब के सामने रख रहा हूं और तलाटी साहब के सामने रख रहा हूं जो आज के सेशन चेयरमैन है, कि वेदर डिसअलाउंस कैन बी मेड इफ देयर इज नो एग्जेम्प्ट इनकम. अगर कोई एग्जेम्प्ट इनकम नहीं है तो क्या डिसअलाउंस हो सकता है? सेकेंड इज व्हाट हैपेंस इन केस ऑफ those expenditure where the income is under chapter C of 6A, profit linked deduction, ATIA, ATIAB, ATIAC की अगर exempt income deduction. देखिए exempt income और deduction में फर्क है. exemption और deductions are separate things. उस केस में क्या होगा? तीसरा सवाल पूछा है कि whether this section is applicable if the shares are held as stock in trade. और ये बड़ा फेमस डिसीजन था ऑनरेबल सुप्रीम कोर्ट ऑफ इंडिया का मैक्सॉप इन्वेस्टमेंट के केस में. एंड अवर ऑनरेबल स्पीकर, ही विल एक्सप्लेन द फैक्ट्स विद द लॉजिक आल्सो. आई हैव रीड सो मेनी डिसीजन ऑफ बंसल साहब, और जब वो डिसीजन लिखते थे तो बड़ा लॉजिक देके वो डिसीजन लिखते थे. एंड लास्ट क्वेश्चन, डिविडेंड को लेके क्या कहानी है? पहले डिविडेंड पे डीडीटी लगता था और अब डिविडेंड को टैक्सेबल कर दिया शेयर होल्डर्स के हाथ में. लेकिन एक कंडीशन उसमें भी लगा दी कि आपको 20% ऑफ द इंटरेस्ट आपको मिलेगा. तो 14A की एप्लीकेबिलिटी कैसे होगी उस केस में, ये भी बड़ा बर्निंग सवाल है आज की डेट में. एंड देयर आर सो मेनी इश्यूज आर देयर. एंड टुडे वी हैव द ब्लेसिंग ऑफ 2 luminaries of the direct tax world, Shri Sunil Talati ji and Shri IP Bansal ji. So let us, friend, now I hand over the mic to Shri Dr. Raj Chawla for the further proceedings.
Thank you, CA Sunil ji. Now I request our today session chairman, CA Sunil Talati ji, to please say a few words.
Very good evening to all of you. It's a matter of great pleasure and honor for me to be a participant in this webinar organized by Mr. Raj Chawla under NICAI and so many other luminaries who are participants as well as speakers in this gathering. I'm really impressed that in spite of not having a formal study circle or a branch, you as professionals are gathering and trying to learn something. And that's the great thing, and I must compliment. And let me tell you why. I'll just take your 5 minutes on the background. That yesterday being 1st July, right from Prime Minister to Home Minister to almost 11 ministers tweeted and gave us the compliment. And this compliment was for what? Only because we are chartered accountant. And 1st July is a chartered accountant day. We enjoy a special privilege and status, and we really have respect in the society only and only because we are CA. And that is what matters most. That if you are a CA, you have to be equipped with latest knowledge, latest developments, and what is happening on day to day. If you are not keeping yourself abreast of the latest developments, you are thrown out. You cannot render appropriate service. You cannot justify your existence. I would go to the extent. And therefore, you will not earn that respect and regard from the society. So, to maintain that respect, regard from the society, and also in turn the remuneration from your clients, it is extremely important that we keep ourselves abreast of the latest developments. And my compliments to all of you for doing that. I'm thankful to Mr. Raj Chawla for inviting me. Mr. Sunil Garg has rightly started the tone with regard to the importance of computation of income. Mr. Bansal Saab, Honorable ITAT member, to whom we used to bow down when he was in Ahmedabad for almost 5 years, he had rendered hundreds and thousands of very landmark and important decisions. So you are lucky, I would say we are lucky to have such a wonderful speaker, learned speaker. But what is important is Mr. K.T. Thakur, Mr. Bansal Saab would recollect, he was one of the oldest member of the Ahmedabad Tribunal and was in Ahmedabad for almost more than 10 years. He used to tell all chartered accountants appearing before the tribunal as well as before CIT appeal that every time there is an issue, there is a question, open the Income Tax Act, read the section, read where is half comma, read there is comma, read there is full stop, and try to understand. So that's a fundamental thing we chartered accountants must learn. And that's what Mr. Sunil Garg has very rightly mentioned. Important of Section 5, chargeability. Whether it comes in the purview of income first, and if it comes, it will be taxed under what head. Some interesting issues with regard to salary. Fundamental principle, as Sumti Morarji's case decided, there has to be a relation of employer and employee. So if one person pays something to another person, fundamental relation of employer-employee has to exist. Then and then only it will be taxable in the hands of salary. If it is not so, it will be a professional income and therefore under the different head. So this is to be kept in mind while offering the income under salary. And second important point, friends, for all of us, the return of income which is to be filed, Form 1, salary, Form 2, then it only income from other sources, Form 3, business, Form 4, capital gain and other sources, and Form 5, in case of Form 4 in case of presumptive taxation. So which form is to be filed is also important while deciding the head of income. So we have to be very careful. Now dealing with house property income, as you mentioned, if we go from section 21, 22 onwards, if it is land and building and rent, yes, it will be taxed from income from house property. But an interesting issue arises that I have my building, all my entire building is given on rent, and I have let out, I am earning income from property. Now on the top of the terrace, I have given a holding, and from holding, I am also earning the income because of the advertisement given. Whether that income is from building or it is income from other source. Because building is not on rent, terrace is not given on rent, a side holding has been created or erected, and from holding I am earning the income. Now, important decision, Honorable Speaker, Mr. Bansal Sahib would recollect, there are decisions that no, because the holding is attached to building, therefore what you receive is the income from house property and not income from other sources. And why this difference? Because if I am allowed to be taxed under the head income from house property, I get the deduction of 1/3 straight away. If it is income from other sources, I get only the expenditure incurred to earn that income, which would be very less or meager. Therefore, friends, it is important for all chartered accountants to learn and appreciate that which source of income which will fall under what head. Honorable Speaker in his presentation has very rightly distinguished the difference between the heads of income and source of income. And I would earnestly request him to allow to go in the detail by Honorable Speaker and allow the members to appreciate this difference. And then coming to 14A, three important points raised. Fundamental point, friend, when you visit 14A, read the section. What does it say? Whether while computing the total income, no deduction shall be allowed in respect of expenditure incurred by the SSE in relation to, now this is important, income which does not form part of the total income. meaning thereby it does not enter the computation. Income which does not form part of total income means it should not enter the computation. Therefore, replying the last question first, if the SSC is getting deduction under chapter 6A and other, by which the income goes down, it is not an exempted income. It is a deduction available. It is not the income it has entered the computation and then has gone out of the deduction. And therefore, obviously, section 14A will not be attracted. And therefore, 8D will not be visited. The second important point was, if there is no exempt income, I have 10 crore rupees with me, out of which I invested in 3 crore rupees of shares and securities. I thinking that it's a good company. And let us talk prior to amendment in dividend. And I did not earn any dividend because the company did not earn profit and did not declare the dividend. Would section 14A be hit? Answer has to be no. Because while computing my total income, I don't have any income which does not form part of total income. My intention was, yes, to earn exempt income. I invested in investment which would yield me exempt income. But in reality, while applying section 14A, I just don't visit that section because I don't have in that previous year any income which is not includable in the total income. So that is the point number 2. And most important, Honorable Speaker would also like to have his own view. If I am holding shares and securities as a stock in trade, whether section 14A would be applicable. It is not an investment. My personal view, and there are decisions to that extent also, that whether it is an investment or it is stock in trade, moment you are earning an exempt income, income which is not forming part of total income, section 14A is invocable. And moment 14A is invocable, rule 8D is invocable, and therefore the computation would start. Question would be whether 8D is workable or it fails. Because 8D says about the average investment, and these are not my average investment. And therefore, if I am unable to work out disallowance under Rule 8D, 14A would become redundant. So this is an interesting issue, and I would earnestly request Honorable Speaker Sri Bansal Sahab to throw light on this. With this opening remark, friends, I would once again convey my deep sense of thanks and gratitude for allowing me this opportunity to share my personal views. There is nothing like chairing this session. Honorable Bansal Sahab would chair and lead the discussion for the benefit of all the participants. Thank you so much.
Thank you, sir. Thank you. Really, it's our pleasure, sir. If you are at our platform, it's our pleasure. Thank you very much. Now, I request our guest speaker, Advocate IP Bansal ji, to please start his deliberation. Bansal ji, please.
Good evening to all. My special thanks to Shri Raj Chawla ji, who has given me the opportunity to come on this platform and present deliberation on section 14 and 14A. I am thankful to Shri Talati ji also, who on our request has agreed to join this session, which has added value to our added a very good value to our seminar. And I thank Shri Sunil Garg also, who is my supporter throughout my profession also, and he's like my brother. So today's topper falls under chapter 4 of the Income Tax Act, and section 14 is under the heads of income, and section 14A, which is the topic of today, 14 and 14A, is under the head expenditure incurred in relation to income not includable in total income. Shri Sunil ji has already highlighted the importance of section 245 and section 5, which describe the scope of income. Section 245 describes the total income. So unless income is included in total income, it is not chargeable to tax. So there is no question of disallowance of 14A and whatever it may be. It is only if an income is includable under any head and is included in the total income, then only 14A will be applicable. So section 14A, as the head suggests, describe only heads of income, which are the 5 heads. Earlier, there were 6 heads. Earlier there were 6 heads. Second page. First head is salaries, and second head was earlier interest on securities, which has been omitted with effect from 1/4/1989, and it was omitted by Finance Act 88. The relevance of omission is that according to amendment, it has lost its relevance whether interest earned on securities and it could be included in either in income from other sources or in the under the profit and gains of business or profession. So it was omitted, and accordingly, consequently, section 18 to 21 were also omitted. And now coming to the next head, that is income from house property. As we know that if we let out building and building, then it will be income from house property, and similar profit and gains and capital gain and income from other sources. So one has to go to the particular section relating to salaries fall under are covered by section 15 to section 17, and then house property is covered from section 22 to 27, and profit and gains of business and profession are covered from section 28 to section 44 DB. Capital gains are covered by section 45 to 55A. Income from other sources are covered from 56 to 59. So one has to see that under which head the income falls. The term total income is defined as already told that under section 245 of the income means the total income of total amount of income referred to in section 5 computed in the manner laid down in this act. So manner is laid down in the sections I have already told under the respective each head. Scope of total income is defined in subsection 1 of section 5, and for domestic payer, it includes all income from whatsoever source derived which is received or deemed to be received in India by or on behalf of such person, or accrue or arises to him in India, or accrues or arises to him outside India. Amendment in section was what? Now some legal principles. First and foremost decision of Honorable Supreme Court in this category on section 14 falls is United Commercial Bank Limited versus CIT. It is reported in 32 ITR 688, where it has been said that on true construction of various sections of sections of 92(2) Act, the income of an assessee is one, and various sections are modes in which statute directs that income tax is to be levied, and these sections are mutually exclusive. What is the meaning of mutually exclusive? That they cannot both occur at the same time. If income falls under one head, suppose it is income from house property, then at the same time it cannot fall under the head business, because these sections are mutually exclusive. First principle laid down by the Honorable Supreme Court is that. And second principle laid down is that intention of legislature making the various heads of income, profit and gains mutually exclusive. So every item of income, whatever its source, would fall under one particular head, and for purpose of computing income, for charging of income tax, the particular section dealing with that head will have to be looked at. So it was held that interest on security by whatsoever, by whomsoever, and for whatever purpose held to be taxed under section 8, then it was governed by interest on security, and under no other section is well founded and must be sustained. It being specific head of chargeability of tax income from interest on security, whether held as trading asset or capital asset, would have to be taxed under section 8 and not under section 10 of the act. So it was held that it was assessable only under the head and interest on security. similar proposition has been laid down in Azimganj Estate versus CIT 352 ITR 82, where the assessee was Wilder, and it had in his balance sheet unsold flats which were given on rent, and the value of unsold flats in the books was 26 lakh, and rental income was 49 lakh under the head and it was credited by the assessee under the head in his books of accounts operating income in the profit and loss account. So receiving and letting outsold. So this was held that income of the assessee is one, and various sections of Act direct the modes in which income is to be levied. No one of those sections can be treated as general or specific for the purpose of one particular source of income. They are specific and deal with various heads in which an item of income, profit, and means an assessee falls. These sections are mutually exclusive, and where an item of income falls specifically under one head, it has to be charged in that head only. The next important decision of Honorable Supreme Court is Tutikarn Alkali Chemical and Fertilizer versus CIT. This is very important decision. So it was assessee's business was in the setup condition, in the development condition for which loan was taken for machinery and establishment of the. So there was surplus fund which was deposited in the bank for earning interest. That interest was set off against the other income, cost of project, and it was held by the Supreme Court that it has to be taxed as interest income in the year because business has not commenced on that date, and if business income cannot be assessed, then assessee is not entitled to set off that interest against business income. So next decision in the case of Nalnikant Amba Lal Modi versus SAL Supreme Court 61 ITR 428. In this case, assessee was reputed advocate, and he left the profession. Thereafter, he received certain income in the later part. So what was held in this case that the court was unable to agree with that whether an income falls under one head. If assessee was carrying on profession, that character of income will not change even if he has stopped his business or profession. So the income was assessable only under the head business or profession income. So one thing is clear that if you receive some amount even in respect of closed business or profession, that head will not change. The income will remain that, though in that case it was held that the receipts were not taxable in the year of receipts. Now coming to the next case, that is Shri Sobhag Malodha versus CIT. This is Allahabad High Court, where it has been said that source of income and head of income are different. Under the same head, there can be two sources. As an example, there may be different business, each of which would provide a different source of income, and it is always open to an assessee have one previous year for one business and another previous year for second business, even though both the sources may fall under the head of business. So this is the position that sources may be many, but business income will be combined. So now the next case is Janab A. Sayyid 39 ITR 660. That is Madras High Court. In this case, assessee was carrying on the business of sale of BDs, and at the same time he was earning income from horse racing and attend races quite regularly for a number of years, from which the income was earned. So it was held that the source of income is relevant for determining first whether it is assessable or non-assessable, and if it is exempt from assessment for deciding next which will be the and if it is not exempt from assessment. Then for deciding the next, that which of the heads enumerates in section which has to be assessed, it was held that income was exempt, being casual or non. At that time, casual or non-recurring income, it was held that it is exempt. The next important case is Shuggan Das and Company, 55 ITAT, 17 Supreme Court. It was held that the heads described in section 6 at that time, 1992 Act, and further elaborated for the purpose of computation of income in sections 7 to 10 and other sections, are intended merely to indicate classes of income. The heads do not exclusively delimit sources from which income arises. This is made clear in the judgment of this court in United Commercial Bank, which I have referred to earlier, that business income is broken up under different heads only for the purpose of computation of total income. By that breakup, the income does not cease to be income of the business, the different heads of income being only the classification prescribed by the Income Tax Act for computation of income. The next important case is CIT versus Express Newspapers Limited, 53 ITR. Yeah. So in this case, a legal fiction is limited to the purpose for which it is created and should not be extended beyond its legitimate field. Thus, legal fiction created by section 45 cannot lift the capital gain from fifth head in section 14 and place it under the fourth head. It only introduced limited fiction, namely the capital gain accrued will be deemed to be income of the previous years in which the sale is effected. So next case is case of Bihar State Cooperative Bank Limited versus CIT, and it has been held that it does not matter anyway how the assessee has chosen to show a particular income in the return of income submitted by him. Income is to be taxed under appropriate head of the income. Next case is Gujarat High Court case 107 ITR 590. In cases where the income of assessee is derived under different heads of income as recognized in section 14, before deciding the question regarding permissible expenses to be deducted from total income for the purpose of computation of income, the expenses have also to be apportioned. So apportionment part of the expenditure relating to exempt income and relating to the income, taxable income. So this principle was established. Now, what is the importance of section 14? Importance of section 14 lies most connection with claims of set-off of losses as per section 70 to 80 of the Act, for which separate deliberation will be held on 31st July 2021 as per schedule of Bevathon. So briefly, I can discuss this. Few examples showing the impact of section 70 to 80 on the head-wise computation of income is section 70 and section 74 relates to short-term capital loss and long-term capital loss to be set off against capital gain in the same assessment year, and it can be carried forward up to 8 years for claiming the same against capital income. Section 71 relates to losses from other sources which can be set off in the same year against income from other sources or any other head, and no carry forward of loss is permitted. Section 71 B, loss from let out property and interest paid on borrowed capital for self-occupied property can be set off against income of the same assessment year from house property or any other head, and it can be carried forward to next 8 years against income from house property. Section 72 relates to loss from business or profession, non-speculation other than depreciation against business income head or any other head except salaries, section 71 subsection 2A, and subsequent year for 8 years against same head. Section 73, loss from speculation business can be sought off against speculation profit of the same assessment year and in subsequent 4 years against speculation profit from assessment year 2006-7, earlier up to section 2 up to assessment year 2005-6. It could be carried forward for 8 years. So this is the relevant and importance of section 14. This covers the section 14. So now I am coming to section 14A. 14A, as it appears in the Act, is expenditure incurred in relation to income not includable in total income. Section 14A subsection 1 describes for the purpose of computing total income under this chapter, no deduction shall be allowed in respect of expenditure incurred by the assessee in relation to income which does not form part of the total income under this act. In this, two phrases are very important to be noted. That is, for the purpose of computing chapter, no deduction shall be allowed in respect of expenditure incurred in relation to income which does not form part of the income. So unless income is treated as part of income, there cannot be any disallowance under section 14A. Subsection 2 describes that assessing officer shall determine the amount of expenditure incurred in relation to such income which does not form part of the total income under this act in accordance with such method as may be prescribed. So this authorized the assessing officer to determine the amount of expenditure income in relation to income which does not form part of total income. And on the condition prescribed is if assessing officer having regard to the accounts of the assessee. So first condition is that first assessing officer has to see the accounts of the assessee. He cannot barely invoke section 14A. Yes, accounts of what satisfaction he has to draw from the account is not satisfied with the correctness of the claim of the assessee in respect of such expenditure in relation to income which does not form. So when AO is authorized to invoke section 14A, that he having regard to the accounts of the assessee should not be satisfied with the correctness of the claim of the assessee. Now the claim of the assessee can be of two types. One, when there is some disallowance is made by the assessee himself in the return of income while computing the exempted income or by computing his total income. So that is the one situation. And second situation could be that there is no expenditure incurred for earning the exempted income. So there can be two situations. Now the second situation is covered by subsection 3 of section 14A. The provisions of subsection 2 shall also apply in relation to cases where an assessee claims that no expenditure has been incurred by him in relation to income which does not form part of the total income under this act. So this subsection 3 covers the situation where assessee claims that I have incurred no expenditure in relation to income which does not form part of the income. So proviso was added because of the reason that this section was inserted by Finance Act number 2001 with a retrospective effect from 1/4/1962. So as on that date, whatever assessments were pending, they were liable to be scrutinized in a manner to make the disallowance under section 14A. So this proviso was added to say that completed assessments will not be disturbed, as it will create a tremendous task for the revenue officials, because every completed assessment then be disturbed because retrospective applicability has visited from the beginning of the act itself. So this amendment was brought to that effect. So now what are the amendments and legislative history of section 14A? Now I have already mentioned that Finance Act 2001 has inserted section 14A with retrospective effect from 1/4/1962. It provided disallowance for expenses incurred in relation to income exempt from income. Second amendment is made by Finance Act 2002 when proviso was added to section 14A with a retrospective effect from 11 May 2001, clarifying that section 14A cannot be used to reopen or rectify the completed assessment. Then again amendment was brought by Finance Act 2006 when subsection 2 and 3 were inserted with effect from 1/4/2007. They provided the methodology for computing the disallowance under section 14A. So there is a gap between providing methodology. Therefore, this section, actually subsection 2 and subsection 3 inserted with effect from 1/4/2007 could not work for some time, because Rule 8D was inserted by the IT 5th Amendment Rules 2008 with effect from 24th March 2008. Therefore, question arises before various courts that whether rule can be retrospectively applied also. So it has been answered in favor of assessee, and it has been held that Rule 8D cannot be applied retrospectively. So this is the position, legislative history of the. So now coming to, for detail, you can see the PPT, which has already been uploaded on the site of page of Shri Raj Chawla ji, as I have been told. So if one, I will mention that there is a circular number 5 of 2014 dated 11th February 2014 issued by CBDT clarifying that uses of term includable in the heading of section 14A and Rule 8D indicates that it is not exempt income, should necessarily be included in a particular year. Income for making disallowance, which is apparent from section 14A, which does not use word income of the year, but income under the act. However, there are several judicial pronouncements which have been pronounced that in absence of non-taxable income, section 14A cannot be invoked and disallowance cannot be made, to which we will come later on. So this I have already. Now there we are coming to Rule 8D. Rule 8D as inserted has also been amended with effect from 2nd June 2018. So it describes the method of determining the amount of expenditure in relation to income not includable in total income. So earlier there was a formula, as you know, giving several type of calculations. Now it has been made easy to describe that where the assessee having regard to accounts of the the assessing officer having regard to the accounts of the assessee of a previous year is not satisfied with. First condition is that the correctness of the claim of the expenditure made by the assessee. I have already mentioned that there can be two type of situation where the expenditure has itself been disallowed by the assessee, whether it is in accordance with Rule 80 or whatever the calculation of the assessee is. And the second condition where the claim made by the assessee is that no expenditure has been incurred. So this subsection 1 is in tandem with the section 14A language. Now sub-rule 2 describe the method of disallowance. The expenditure in relation to income which does not form part of the total income shall be aggregate of the following amount. It shall be aggregate of the following amount. The amount of expenditure directly relating to income does not form part of the income. So there is no dispute to the fact that if the expenditure is directly related to the income which does not form part of total income, then it has to be disallowed irrespective of the fact that whether it is computed under Rule 8D or whether it is computed otherwise. So if you have incurred direct expenses in earning that income, of course, that income should be there in the previous year. And second aggregate component is the amount of equal to 1% of annual average of monthly average of opening and closing balance of the value of investment income from which does not or shall not form part of the total income, provided the amount referred to in clause 1 and clause 2 shall not exceed the total. So proviso was also added that it cannot in any manner exceed the amount of total expenditure claimed by the assessee. So what is the impact of amendment made by in the rules with effect from 2nd June 2006? It has been described in this table. So original rule was the expenditure incurred directly to earn exempt income, and amended rule also contain the same provision. So there is no change. Second component is the interest expenses worked out on the basis of prescribed formula in the proportion of average value of investment yielding exempt income to average value of total asset, which is not directly attributable to exempt income. This is Rule 8.2 clause 2. So amended rule does not have such provision, and the formula specified in relation to indirect expenditure in original Rule 8D2 has been deleted. Therefore, indirect interest expenses are not to be disallowed. Third is on presumptive basis, there was disallowance of 0.5% of the annual average value of investment yielding exempt income. This was described in Rule 8D2, Clause 3 earlier. Now, amended rule on presumptive basis, this has been enhanced to 1% of the annual average of the monthly average of value of investment yielding exempt income. So, change in the rate of presumptive expenditure has been enhanced from enhanced to 1% from 0.5%. The original rule prescribed considering the annual average of investment, whereas the amended rule provides for the annual average of the monthly average of value of investment. So there was no provision in earlier original Rule 8D2 restricting the disallowance to exceed the total expenditure claimed by the assessee. So the disallowance amount as computed under Rule 8D shall not exceed, according to amended rule, not exceed the total expenditure claimed by the taxpayer. The new rule restricted the disallowance not to exceed the total expenditure claimed by the assessee. These are the differences in the amended rule and original. So now coming to the important legal pronouncements. So first important case was rendered by Honorable Supreme Court in 2010, and it is reported as CIT versus Walford Share and Stock Brokers. It is reported in 326 ITR, page 1, Supreme Court. What has been said? They have interpreted section 14A. In section 14A, the first phrase is for the purpose of computing the total income under this chapter, which makes it clear that various heads of income as prescribed under chapter 4 would fall within section 14A. The next phrase is in relation to income which does not form part of the total income. According to Supreme Court, it means that if an income does not form part of total income, then the related expenditure is outside the ambit of applicability of section 14A. Further, section 14 specified 5 heads of the income which are chargeable to tax. In order to be chargeable, an income has to be brought under one of the 5 heads. The propositions we have been making out all have been described in this important decision of Honorable Supreme Court in the case of CIT versus Walford. So what they have held that section 15 to 59, that is starting from salary to other sources, laid down the rules for computing income for the purpose of chargeability of tax under those heads. Section 15 to 59 quantify the total income chargeable to tax. The permissible deduction enumerated in section 15 to 59 are now to be allowed only with reference to income which is brought under one of the above heads which is chargeable to tax. This is the importance of section 14 and 14A. Now the next decision rendered by Honorable Supreme Court, Bombay High Court, is Godrej and Boyce Manufacturing Company Limited versus DCIT. This decision also came before Honorable Supreme Court, so that we will speak to later on. This Bombay High Court decision is reported in section 328 ITR 81. Main principles laid down in this decision are that before invoking subsection 2 of section 14A, the AO has to first consider the correctness of the claim of the assessee having regard to the accounts of the assessee. So the language of section is very clear, subsection 2 is very clear, that AO is authorized to enter into the arena of section 14A only if after considering the correctness of the claim of the assessee having regard to the accounts of the assessee. Second principle laid down is the satisfaction of the AO has to be objectively arrived at on the basis of those accounts after considering all the relevant facts and circumstances. If we are able to establish, if we are able to prove that AO has not recorded such satisfaction, or the satisfaction recorded by the AO is not objective and he has failed to consider the relevant facts and circumstances, we can contest the invocation of section 14A disallowance. Now the rule 8D is applicable from 2008-9. So they have held that it cannot be retrospectively applied. You remember that section 14 14A subsection 2 was brought in statute from 1/4/2007, but it become really applicable from assessment to 2008-9, because rule which was brought to the statute could not be applied retrospectively. Now, even one more important principle laid down was that even absence of subsection 2 and subsection 3 of 14A, the AO is not precluded from making apportionment of expenditure between taxable income and non-taxable income in order to give effect to the substantive provisions of subsection 1 of section 14A. So, even in absence of section 2 and 3, the law earlier was prevailing that expenditure relating to exempted income cannot be allowed against expenses as expenditure against taxable income. So this is the principle right from the beginning. It is therefore 14A has been rightly inserted in the statute with retrospective effect. Now, Supreme Court has considered this decision and has interfered only to the extent that they have not interfered. Actually, they have upheld the decision that it was claimed that the dividend which has been received by the assessee, though exempted in the hands of the assessee, but it has suffered tax in the hand of payee company under section 115(0). So Supreme Court has interpreted that it should not be included. It should be included in the income of the assessee. If exempted income is included in hands of the assessee and it has not suffered in the hands of the assessee, tax in the hands of the assessee, then the provision of section 14A would be applicable. So this was the Supreme Court decision reported in 247 Taxman 361, where assessee went in appeal against the order of Bombay High Court. Now I am coming to the decision of Honorable Punjab and Haryana High Court in the case of CIT versus Hero Cycle 323 ITR 518 Punjab High Court. Disallowance under, it says that disallowance under section 14A require finding of incurring of expenditure where it is found that for earning exempting no expenditure has been incurred. Disallowance under section 14A cannot stand. So the primary requirement for invocation of 14A would be that there should have been expenditure incurred by the assessee to earn that exempted income. If it is not there, then 14A is not applicable at all. The decision which we were speaking of mostly, Maxop Investment Limited versus CIT. This is a recent decision of Honorable Supreme Court reported in 402 ITR 640. Now, what Supreme Court has said that the dominant purpose for which the investment is made by the assessee into share may not be relevant. Therefore, in making investment in order to gain control of investee company is not relevant factor while considering allowability or otherwise, applicability or otherwise, or otherwise of section 14A. So now there was a very great controversy prevailing on that this investment has been made by me in order to gain control of the investee company, and therefore it is business. Therefore, it cannot be termed, dividend cannot be termed as exempted income. So this controversy has been resolved by Honorable Supreme Court, and they have said in so many words that it is not relevant that investment has been made in order to gain control of the investee company. Therefore, 14A is not applicable. So next principle is that if the expenditure incurred on earning of dividend, that much of expenditure which is attributable to dividend income has to be disallowed and cannot be treated as business expenditure. The principle of apportionment of expenses as ingrained in section 14A of the Act is important. So earlier also we have discussed a decision where principle of apportionment of expenses has been upheld, and distinction between shares as having been held as stock. This is important. Distinction between share as having been held as stock in trade and not as investment is important. As where shares are held as stock in trade, it becomes business activity of the assessee to deal in those shares as a business proposition, and whether dividend is earned or not becomes immaterial. So this is very important pronouncement of Honorable Supreme Court. The earning of dividend income is therefore incidental to the trading of securities and is thus extinguishable from the activity of investment which result in acquiring controlling interest in the investee company. So this has also been distinguished that why the stock in trade is not cannot be considered as if dividend is earned out of stock in trade, then it is not exempted dividend. Now coming to the next decision of Karnataka High Court, it is also very recent decision and rendered in 2020 that the disallowance under section 14A of the Act is a notional disallowance, and therefore by taking recourse to section 14A of the Act, the amount cannot be added back to the book profit under clause F of section 115JB of the Act. So when normal computation is made and disallowance is made under section 14A, then another computation is made under section 115JB. So disallowance cannot be added to the computation made under section 115JB. Next decision is of Honorable Karnataka High Court. This is also a very recent decision. This is PCIT versus Novel Software Development India Private Limited, 126 taxman.com 29. So what is this decision? It is said that where there is no exempt income, the question has run that where there is no exempt income earned by the assessee during the year, though I have made a lot of investment and which earns dividend income in the earlier years also and subsequent years also, but if in this year there is no exempted income or dividend, then disallowance cannot be made. And they have had this decision by relying upon Madras High Court decision, Delhi High Court decision in the case of Chaitinath Logistic Private Limited and Cammi West Limited. And these decisions have also been affirmed by Honorable Supreme Court. And they have said that MaxOp decision has not discussed this issue. Therefore, MaxOp has no application on the issue that whether in absence of exempted income, whether disallowance can be made under section 14A. So this issue is covered till date by Honorable decision of Honorable Madras High Court, Delhi High Court, as well as Karnataka High Court. This is important. Now, next decision is PCIT versus Investor Venture Limited, 123 taxman.com 378. This is also an important decision. Now, in this case, what has been happened? That exempted dividend income was a sum of rupees 1,80,30,965. And AO computed the disallowance as per provisions of 14A and 8 Rule 8D at a sum of rupees 2,48,85,000. So he made the disallowance. So now the issue before Madras, it has been beautifully discussed. And if you permit me, I can discuss it from the notes made by me. And because this question has also been raised during the preliminary discussion. Honorable High Court has held that we make it clear that the expenditure for earning exempted income has to have a reasonable proportion to the income. Every word is important. So earned going by the common financial prudence. So what they have held that it has to be according to common financial prudence. Therefore, even if assessing authority has to make an estimate of such an expenditure incurred to earn exempted income, it has to have a rational nexus with the amount of income earned itself. So amount of income earned cannot lose its relevance. Disallowance under section 14A of rupees 2,48,85,000 as expenses to earn exempted dividend income of rupees 1,80,35,965 is per se absurd and hypothetical. The disallowance under Rule 8D cannot exceed the expenses claimed by the assessee under proviso to Rule 80. Therefore, where the assessee claimed that assessee did not incur any such expenditure during the year in relation to earn dividend of rupees 1,80,30,965, the burden was on the assessing authority to compute the interest on such borrowed fund, which were dedicatedly used by used for investment in security to earn such exempt. So burden was on the assessing authority, not on the assessee. Dividend income. The disallowance under Section 14A cannot be a wide guesswork, benefit of grounds of reality, ground realities. It cannot be lost sight of by the revenue authorities. It has to have a reasonable and close nexus with factually incurred expenses. It is not deemed disallowance under Section 14A. 14A is not deemed disallowance of the Act, but an enabling provision for assessing authority to compute the same on the given facts and figures in the regularly maintained books of account. So they have picked up from the language of Section 14A. The assessing authority also could not have called upon assessee himself to undertake the exercise of computing disallowance under Section 18D of the rules. So assessing officer cannot ask the assessee to compute the disallowance himself. Such abdication of duty is not permissible in law, since no such exercise has been undertaken by the assessor. The case calls for a remand. So these are the observations one can use when making the disallowance rule under Rule 80 exceeds or equal to the expenditure. That situation will also be covered by this only. So now I'm coming to the next important decision of Honorable Bombay High Court, which is also recent, CIT versus Societe de Fomento Industrial Private Limited. What happened in this case? In this case, it has been held the application of Section 14A and Rule 80 is not automatic. So what the High Court is saying that 80 and Section 14A is not automatic in each and every case where there is income forming part, where there is income not forming part of the income, and before its application, it needs to be justified as to how expenditure incurred by the assessee during the relevant year related to income not forming part of his income. Second proposition is that in this case, what happened? Assessee earned dividend income of 13.85 crore, and it was claimed that assessee did not incur any expenditure as it had invested surplus fund through the bankers and other financial institutions, and officials of investment company came to the doorstep of the assessee to complete the formalities of assessment. However, AO, taking the average investment at rupees 381 crore, disallowed 0.5% at a sum of rupees 1 crore 90 lakh 83,548. The disallowance was deleted by the ITAT and order of ITAT was upheld. So the disallowance was made in entirety in spite of applicability of Rule 80, and which expenditure even did not exceed the computation of Rule 80 as well as expenditure incurred by the assessee. Now the next case is of very important, Delhi High Court. This is PCIT. This is also recent decision of 2019, PCIT versus Vedanta Limited. What does it say? It is apparent that assessing officer, without examining, commenting, and rejecting the disallowance made by the assessee, had applied Rule 80 as compulsory and universally applicable rule where the assessee has earned exempt. This decision is rendered by Justice Sanjeev Khanna, and it is very, very beautiful. If you read this decision, you will many of the doubts will go away. However, Rule 80 cannot be invoked and applied unless assessing officer record his dissatisfaction regarding correctness of the claim made by the assessee in relation to expenditure incurred to earn exempt income. This is the mandate and precondition imposed by subsection 2 of Section 14A. So in so many words, Delhi High Court has said that the application of Rule 80 is not compulsory, it is not universally applicable, it is not automatic, and before invoking the section, AO has to record his dissatisfaction regarding the correctness of the claim of the assessee, having regard to the correctness of the accounts of the assessee. And then Honorable High Court has said that Rule 80 is in the nature of best judgment, determining in default and on rejection of the explanation of the assessee in relation to expenditure incurred to earn exempt income. Rule 80 is not applicable by default, but only if and when assessing officer record his satisfaction and reject the explanation of the assessee regarding disallowance of expenditure. In the present case, the assessment order proceeds on the wrong assumption that Rule 80 would apply to all cases and is mandatory. finding of the tribunal affirming the order of Commissioner of Appeal is in accordance with law. So disallowance was held to be rightly treated. Now, some of the frequent question answer I have prepared, that when Section 14A can be invoked. The process of disallowance under Section 14A can be invoked by AO only when he is not satisfied with the correctness of the claim of the assessee in respect of such expenditure in relation to income which does not form part of the total income under this Act. Therefore, in order to make disallowance, either in a case where assessee claims that it has not incurred any expenditure in relation to income which does not form part of total income under the Act, or in a case where assessee claims that in respect of such income it has made a particular amount of expenditure, the AO has to record his satisfaction that the claim made by the assessee in respect of such expenditure is incorrect, and then only AO is empowered to determine the same in accordance with such method as has been prescribed under Rule 80 of the rules. Now the second question may be under what circumstances disallowance under Section 14A can be made. Following are the few examples where disallowance of under Section 14A cannot be made are as follows. First, where assessee does not earn any income which does not form part of total income under the Act. In the case of PCIT versus Novel, which we have already discussed, it is held that where there is no exempt income earned by the assessee during the year, no disallowance under Section 14A was to be made. This view has been taken by relying on the decision of Madras High Court and Delhi High Court. And second question, maybe the second instance may be where disallowance made by the assessee is equal to the income which does not form part of the total. The second important thing will be that whether disallowance can exceed the income earned by the assessee. The earlier we have discussed that it cannot proviso that it cannot exceed the expenditure income by the assessee. Now the question is that whether disallowance can be more than the exempted income of the assessee. So, in the case of PCIT investor, it has been held that expenditure for earning exempted income has to have a reasonable proportion to the income so earned by the common financial prudence, and this we have already mentioned all these things. Whether in all cases the AO is bound to invoke Rule 80 mandatorily and cannot work out disallowance on estimate basis. We have made the reference to decision of Honorable Delhi High Court in the case of PCIT versus Vedanta Limited, where there has been held that Rule 80 cannot be invoked, applied unless AO record his satisfaction regarding correctness of the claim of the assessee in relation to expenditure incurred to earn exempt income. This is the mandate and precondition imposed by subsection 2 of Section 14A of the Act, and it is other Rule 80 is in the nature of best judgment, determining in default and on rejection of the explanation of the assessee. So these are the it cannot be held to be mandatory, Rule 8B. Now the next question is whether disallowance to be made under Section 14A read with Rule 8D is compulsory for the appellate authorities like CIT, appeal or ITAT, because AO is bound by the statute being the authority administrating the law. So, in the case of Bombay High Court, I have already told the CIT Society Day for Mento Industrial, it is held that there must be proximate relationship between the expenditure and tax exempt income. Only then would a disallowance have to be effected. This court, we may note, on more than one occasion has held that onus is on the revenue to establish that there is a proximate relationship between the expenditure and the exempted income. That is the application of Section 14A and Rule 80 is not automatic in each and every case where there is income not forming part of the total. No doubt the expenditure under Section 14A include both direct and indirect expenses, but that expenditure must have a proximate relationship with the exempted income. Surmises or conjectures is no answer. So I end my deliberation and take permission from.
Thank you, Bansalji, for a wonderful deliberation. So first, Talati sir, if you allow, first we should take the queries of the member. Or would you like to say something?
Well, as you feel, if there are queries, I think they would be more appropriate to first deal with the queries. Then I'll do the
Yes, sir.
concluding
Yes, sir.
remark.
Yes, sir. Yes, sir.
So let honorable speaker answer the queries.
Yes, sir. This is the query of Mr. Harish Batra. If all the investments are through broker and investor bankers with no active involvement of assessee, is 14A still applicable?
So this has been answered already, because the condition only is that in total income of the assessee must include exempted income. So if any expenditure incurred, that will be disallowed. So if there is on record any expenditure incurred by the assessee, whether it is in the nature of fee and exempted income has been earned, then to that extent it will be.
Again, his query, if also we are not able to calculate average investment, is 14A still applicable?
Average investment,
If we are not able to,
दो तीन प्रिंसिपल मैंने आपको बताए हैं. पहले तो आप एग्जेम्प्टेड इनकम देखोगे, एग्जेम्प्टेड इनकम है या नहीं है. अगर है तो उसका प्रोपोर्शनेट ही डिसअलाउंस होगा. अगर रूल 80 में बहुत ज्यादा डिसअलाउंस होता है तो भी एसएससी कंटेस्ट कर सकता है इस बात को. तो ये रूल 80 तो कई हाई कोर्ट्स ने कह दिया, ना तो ये मैंडेटरी है और ना ये ऑटोमेटिक है, और कई हाई कोर्ट्स ने ये भी कहा है भी प्रोपोर्शनेटली डिसअलाउंस हो सकता है. तो और बर्डन भी एओ के ऊपर है. He has to calculate it this term, because we have to claim that भी हमारे पास तो है नहीं, हमने तो इतना एक्सपेंडिचर किया है, हम तो ये एक बात कह सकते हैं. अब एओ के ऊपर है, उसने 14A इन्वोक करना है या नहीं करना, और ओनर्स भी उस पे है कैलकुलेशन का. तो उस कैलकुलेशन को हम कंटेस्ट भी कर सकते हैं, वो हमें कन्फ्रंट भी करवाएगा, तो हम उसको जवाब दे सकते हैं जैसा भी.
So with your permission, I'll just clarify the question. So
Yes.
what queries is asking that I am unable to calculate average investment. With respect to Harish Batraji, I would say this is not a correct question or not reality possible. आपके पास इन्वेस्टमेंट है, ओपनिंग बैलेंस है और क्लोजिंग बैलेंस है. मंथली एवरेज करना है. पहली तारीख की 1 अप्रैल को कितना इन्वेस्टमेंट था, 30 अप्रैल को कितना था, उसका एवरेज कर दो. इसी तरह 12 महीने का एवरेज करके फिर ओपनिंग और क्लोजिंग का एवरेज करना है. यू कैनॉट से दैट इट इज नॉट पॉसिबल. एओ विल आस्क यू द लेजर कि टोटल इन्वेस्टमेंट का लेजर मुझे दे दो, हर महीने कितना कम हुआ, कितना बढ़ा, कितना बेचा, कितना ज्यादा हुआ. And he will pick up the first date and the last date of each month. He will take out the 12 months and then he will take out the average. So to say, Harishji, that it is not possible to calculate, with respect, I would not agree to that proposition at all. And therefore, he will work out 8D calculation. And thereafter, disallowance would be, as Mr. Bansal Sahab has mentioned.
Thank you, sir.
sir, next query from CA Sukhvinder Manasji. In case an employee buys a finished house property in Goa and let it out to various persons for short-term basis, 3 days to 6 months, will the income be taxed the income from house property?
सर अकॉर्डिंग टू फैक्ट्स जो इन्होंने बताए हैं, वो तो हाउस प्रॉपर्टी इनकम ही बनेगी सर. ये कहीं नहीं लिखा हुआ भी 3 दिन के लिए दिए आपने, 6 महीने के लिए दिए तो ये हाउस प्रॉपर्टी इनकम नहीं होगी. तो ये कहीं नहीं लिखा हुआ सर. सो पीरियड इज इररिलेवेंट. So if you are earning as a rent or giving for giving the house property, then it will be income from house property. It cannot be said to be business of the assessee.
Talati Sahab, you want to say something?
तो सेम थिंग बंसल साहब ने बहुत क्लियर कर दिया. बिकॉज क्वेरीज का पॉइंट क्या था कि मैं 3 दिन के लेता हूँ, 5 दिन के लिए लेता हूँ, लोग आते जाते हैं, आते जाते हैं, तो ये मेरा होटल टाइप का धंधा हो गया. Is it a business income or it's a property income? But Bansal Sahab has replied that no, whether you give to 50 people or you give to 5 people, whether you give for 3 days or you give for 30 days, if you are letting out the property, according to Bansal Sahab, it's very clear that it is income from house property. Right, sir?
Yes, sir. Next query, sir. A doctor let out cabin in her clinic to various doctors for an hour a day and charges rupees 5,000 per month from doctor. Is income taxable as income from house property or business income?
letting out the property, if it is carried out as business activity, only then it can fall under. If you are giving a lot of facts will be required to determine this, and it has to be seen the primary intention. What is the agreement between the doctor and the person who is letting it out, and what are the facility he is providing. So all these things, if it is only simple, you are letting out the room per day, or the situation will be same house property, and no professional skill is required for earning this income by the doctor. So if he is rendering some, the owner is rendering some technical help or something like that, you can say that it is associated with the professional income, something like that. But that is very difficult to make out all these things like this.
Talati sir, your comment, please.
I mean, I'm not trying to controvert what Honorable Bansal Sahab said is very true, but I think there was a decision of Bombay High Court or Bombay Tribunal in case of Diners Club that I'm giving various cabins. Now, Diners Club was not only giving cabin as queries has asked. Diners Club would provide operator, he would provide peon, service, all photocopy machine. किसी को आके बैठना है वेटिंग रूम में बिठाएगा, किसी को रात को रहना है तो रात को रहने के लिए अलग कमरा था. So there was a composite service. So if there is a composite service of giving besides the area so many other facilities, then only it can be a business income. Otherwise, as Honorable Bansal Sahab mentioned, it will be a property income.
Yes, sir. Can expenses disallowed can be more than income earned under the section 14A?
Answer has already been given, that it cannot exceed the income, exempted income. This is held in several decisions. We have made part of PPT itself.
Does use of let out property for business or residential purpose has any bearing on the income to be taxed in the hands of landlord as income from house property?
It does not have any relation, because you are letting out the property, whether it is for business purposes you are letting to somebody, or whether residential property, it is immaterial. It is income from house property.
AO think in his own way on multiple thought lines. I hope that
it is why we professionals are there. AO may think many things. AO to 100 baatein karega disallow. We have to give the proper reply that why the thinking of the AO is not according to law, because AO cannot go beyond law. So
Yes.
it is the representation to be made by a professional that how a thing has to be treated as per law.
doctor is not in business of letting out properties. He lets out to other specialist doctor as ENT, heart specialist in my earlier query.
So if he is sharing the consultation charges or sharing the fees with him, and he himself is carrying out the business activity, it may fall under professional activity of the doctor, but not otherwise. I think that Talati ji will agree with me this proposition.
Absolutely, sir. Why he's asking? Because there are now a lot of polyclinic which has opened.
Yes.
So when you enter, there is one receptionist, there is one peon, but otherwise doctors sit separately and they only give the rental charges. The common expenditure are shared by all the doctors. So it would continue to be taxed as property income, as rightly said by your honor.
Otherwise, there is a concept. Otherwise, there is a concept that one person will, a doctor will open the clinic, and he will invite the other specialists to come to his clinic, and the fee is deposited with the receptionist there only, and later on there is arrangement of sharing the fees.
Then,
so that income can be professional income.
Exactly, that will be professional business income. Correct.
Yeah. Yeah.
So, sir, that is the end of the queries. Now I request our session chairman, CS Sunil Talati ji, for his closing remarks.
I don't think there is anything left to be said. Honorable Bansal Sahab has really brought out all the case laws which are extremely important and relevant to the topic of the day. And I think all the participants have gained tremendous knowledge and the ground reality of what is happening. Let me just conclude by sharing with my learned participants so that concept is very clear. First, let us deal with section 14, which honorable member mentioned, heads of income. And he very clearly distinguishes the difference between head of income and source of income. If a particular income is of a particular nature, it has to fall under that head, no option. The question is, you have offered an income under a particular head of income. Say you have offered it for business income. Or somebody has deposited, as I was talking to Mr. Bansal in the afternoon, somebody has deposited 1 lakh rupees in your bank account. And you say, I don't know who deposited, koi aake mere khate mein bhar gaya, I am offering this as income from other sources. That is your version. AO would say that no, you have to explain the source of this income. You just can't say किसी ने ऊपर से आके मुझे दे दिया. So he would add it under section 68. Now be very clear. Once any income is offered by you under any head of income, if AO treats it under section 68 as unexplained cash credit, the new provision of section 115 BBE would apply. Meaning thereby, you will be taxed at 60% plus surcharge plus education tax, that is to 78%. You have no option because chapter 12 deals with determination of tax in case of special cases. The moment your income from other sources or your income from business is treated under section 68 or 69, 69A, straight away you will be hit by section 115 BBE. Finance Act deals with the rate of tax. But this chapter 12 deals with the determination of tax liability in special cases. So this becomes your special case. So don't try to offer any income which you are unable to explain the source, as it would change the head and it would change the tax liability. तो ये एक प्रिंसिपल आपको फंडामेंटल समझना है सेक्शन 14 के लिए. नाउ सेक्शन 14A साहब ने बहुत डिटेल में अच्छी तरह बता दिया. Your disallowance cannot exceed your total exempt income. Your total disallowance cannot exceed your total expenditure. ये दो बात तो फंडामेंटल प्रिंसिपल बेस्ड ऑन वेरियस कोर्ट डिसीजन क्लियर हो गए. Now take the question as certain queries they've asked. I have income of 10 lakh rupees of dividend income and I say मेरा खर्चा 10,000 रुपया हुआ है, and therefore you offer in your return of income disallowance of 10,000. Let us take this first example. So there are two examples. Now AO based on the account is not satisfied with regard to the correctness of claim. So now AO has to prove that 10,000 disallowance is not correct. It could be 11,000, it could be 50,000. Now he just can't blindly say that no, I'm not happy or I'm not satisfied that your 10,000 is incorrect, and therefore I straight away go to 8D, I apply the formula and disallow. My formula disallowance could be 2 lakh, your income is 1 lakh, therefore disallowance will be restricted to 1 lakh. So whenever you offer disallowance of expenditure suo motu in your statement of total income, you must have adequate proof, evidences and documents to prove why 10,000, why not 9,900 or why not 11,000. तो ये पूरा आपके पास proof और document होना चाहिए. Or I may say you have to create or establish those documents to justify your claim. Otherwise, AO will say, no, I am not satisfied, and therefore he would invoke 8D. Now, can he invoke 8D? Honorable member has already answered that he would say that yes, where AO, having regard to the accounts of the FCC, is not satisfied with the correctness of the claim. So he says, I am not satisfied. Your dividend income is 10 lakh. Your total expenditure is so much. Your accounts department, your finance expenditure is this much. How can it be 10,000? And moment he says that, he will be justified. And then he would say, therefore, I am invoking 8D. Or second है or. If he is not satisfied, एक बात होगी. But आप बोलते हो कि मेरा कोई खर्चा ही नहीं हुआ है. So second limit is what? Or claim made by the SSC that no expenditure has been incurred. ये वो बोलेगा ऐसा कैसे हो सकता है? 10 लाख की डिविडेंड इनकम है और आपका 18 भी खर्चा नहीं हुआ. So I am not satisfied, therefore I am invoking 8D. So for that, जो बॉम्बे हाईकोर्ट का डिसीजन बताया लेटेस्ट 2019 का, that you have to demonstrate कि साहब मेरा एक आदमी की जरूरत नहीं, देखो मैंने बैंकर को दे दिया है, मैंने पीएमएस को दे दिया है, पूरी इक्विटी है जो मैं हैंडल करता नहीं हूँ, मैंने इक्विटी कंसल्टेंट को दे दिया है और वही हैंडल करता है, उसको कमीशन वहां से मिलता है, मुझे ना उसको कमीशन देना है ना सैलरी देनी है और मुझे कुछ काम नहीं करना है। और देन वो से वो आके आपकी साइन तो कराएगा, आपके पास फॉर्म भराएगा, आपका बैंक अकाउंट से आपको चेक लिखवाएगा, चेक लिखना पड़ेगा, कुछ तो टाइम गया, उसमें कुछ तो खर्चा हुआ, but you are saying no, there is no expenditure. Moment you say no expenditure, he would say okay, I am invoking 8D. So you will have to demonstrate that नहीं भी मेरा कोई भी खर्चा नहीं हुआ है, ये जो सब काम है, मेरा ऑफिस का टाइम है 9 to 5, मैं ये सब काम 5:30 के बाद करता हूँ, या एवरी सैटरडे माय ऑफिस इज क्लोज, ये सब काम मैं सैटरडे को करता हूँ, and therefore there is no expenditure incurred. If it is proprietor, if it is partner and remuneration is paid, if it is private limited, director remuneration, so वो would justify कि डायरेक्टर का काम गया, अकाउंटेंट का काम कुछ गया, टाइम गया, उसने मेहनत की, फॉर्म भरा, तो कुछ तो खर्चा हुआ ही है। So you have to demonstrate by proof कि ये सब काम ऑफिस आवर्स के दरमियान नहीं हुआ है और मुफ्त में हुआ है, कोई रेम्यूनरेशन लगा नहीं है उसमें। So you have to be very careful in saying or claiming that no expenditure is incurred. Better you prepare some record to say okay मेरा 20,000 का खर्चा है, 10,000 का खर्चा है, 50,000 का खर्चा है, that you will be able to justify, but that again should be matched with the facts. If AO is in a position to prove कि नहीं आपका इतना सारा इन्वेस्टमेंट है, इतने सारे इन्वेस्टमेंट आने जाने हैं, every month there are variations in opening balance and closing balance, so lot of time is consumed, then he will be able to justify to invoke rule 8D. So be very clear how and when rule 8D is invoked. So as a chartered accountant, friends, it is our duty to advise our client how to prepare and maintain the accounts while certifying 44 AB audited accounts in your 3CD report. Also, you have to be advised, you have to be careful and advise your client how you are in a position to circumvent or avoid disallowance under section 14A by not visiting rule 8D. So it is the onerous duty of chartered accountant. And that is why the important. Don't try to create false evidences or create false or incorrect documents. On reality, if you are able to demonstrate correctly, please do that. And if you are able to do that, there are hundreds of tribunal decisions, but all of them are based on the High Court decision which honorable member has passed. And therefore, you have to be absolutely strong on facts to prove कि मेरा इतना ही खर्चा हुआ है या बिल्कुल खर्चा नहीं हुआ है. So you are out of both the limbs, A as well as B of rule 8D, and then you will be able to prove yourself correct and no heavy disallowance can be made under rule 8D. So this is very important, and I'm sure if we as a chartered accountant apply our mind, advise our client accordingly, we are in a position to avoid avoidable disallowances. So with that, I would conclude my closing remark. It was a fantastic presentation by Honorable Bansal Saab. Bansal Saab, I would request, if with your permission, I would like to use your PPT in some of my article or speech. And
आपका ही है सर, आपका ही है सर. हाँ, thank you.
I'll be very happy to use that in future also. Thank you, sir. Thank you so much.
Thank you. आपका म्यूट पे है सर, म्यूट पे है सर, आपका म्यूट पे है राज चावला
जी. So thank you Talati sir, President sir, for a wonderful words and sparing your valuable time to our webinar. So thank you sir. And I also
सर मैं एक रिक्वेस्ट करूं जी.
हाँ प्लीज सर, प्लीज.
मैं कह राज चावला जी सेंट्रल काउंसिल के लिए इलेक्शन लड़ रहे हैं, मेरी सबसे बेनती है भी इनको वोट दो जी सर.
Thank you sir.
Oh, very good sir. Wish you all the best. We
Thank you,
need
sir.
such learned people in the central council, so we are very happy and wish you all the best.
Thank you,
बहुत
sir.
सेवा करते हैं जी सबकी, ये बहुत सेवा करते हैं सब.
थैंक यू सर. बस मेरी सब मेंबर से रिक्वेस्ट है कि जो पीपीटी अभी सर ने, बंसल साहब ने यूज किया है, उन्हीं की पीपीटी है. अगर आपको भी चाहिए तो मैंने यूट्यूब चैनल पे गूगल ड्राइव के थ्रू लिंक कर दिया है, तो यू कैन डायरेक्टली डाउनलोड इट दिस पीपीटी फ्रॉम देयर. आल्सो जो ये हमारा वेबिनार का वीडियो है, ये भी अभी 5 मिनट के बाद वहां पे हमारे यूट्यूब चैनल पे अवेलेबल होगा. और तीसरा, कल हमारा फिर वेबिनार है शाम को 4 से 6। जैसा हमने बताया था, हमारा ओरिजिनल शेड्यूल तो वेडनेसडे एंड सैटरडे है 4 to 6, लेकिन कुछ एडिशनल पॉइंट्स जैसे ये 14 और 14 में एडिशनल था, आज हमने उसको कवर किया है। अदरवाइज हमारा शेड्यूल है कि हम वेडनेसडे को और सैटरडे को शाम को 4 से 6 वेबिनार करते हैं। तो कल हमारा इनकम फ्रॉम सैलरी, और बहुत ही रिनाउंड फैकल्टी कल आ रही है हमारी, श्री R.D. शर्मा। ही इज ए रिटायर्ड इनकम टैक्स ऑफिसर, लेकिन उनकी बहुत बुक्स पब्लिश होती हैं इनकम टैक्स डिपार्टमेंट में। ही इज द मोस्ट पॉपुलर पर्सन। और कल हमारे चीफ कमिश्नर ऑफ इनकम टैक्स रिटायर्ड चोपड़ा जी, श्री सुनील चोपड़ा जी दिल्ली से हैं। ही विल बी आवर सेशन चेयरमैन। हाँ, और एक और मैं रिक्वेस्ट करूंगा मेंबर से कि यू प्लीज सब्सक्राइब अवर यूट्यूब चैनल सो दैट यू विल गेट ऑल द नोटिफिकेशंस एंड डिटेल्स एंड वीडियो ऑफ अवर दिस वेबिनार। और इसके अलावा एक लास्ट में और कि हमने एक व्हाट्सएप ग्रुप बनाया हुआ है क्योंकि अभी तो आपने कुछ क्वेरीज पूछ ली, बाद में भी आपकी क्वेरी हो सकती है। तो अगर आपको वो हमारा व्हाट्सएप ग्रुप ज्वाइन करना है तो प्लीज अपना नाम, क्वालिफिकेशन और एड्रेस, क्योंकि हमें आपका डाटा सेव करना होगा। तो आप ये मेरे मोबाइल नंबर मेंशन्ड है, इस पे 9811081083 पे आप अपनी डिटेल भेजेंगे। वी विल ऐड यू टू अवर व्हाट्सएप ग्रुप, जहां पे हमारी मोस्टली सारी फैकल्टीज अवेलेबल रहती हैं और वो टाइम टू टाइम आपको रिप्लाई करेंगी। With these, I am thankful to all of you and especially thankful to Bansal Saab, Talati Saab for sparing their valuable time and sharing their इतनी वास्ट नॉलेज और इतना वास्ट एक्सपीरियंस है आप दोनों के पास। तो आई एम रियली थैंकफुल टू विद माय हार्ट। थैंक यू सर।